Hi everyone, welcome to FOREX Trading Empire Mentorship Live top-down analysis. So the top-down analysis was hosted yesterday. I was supposed to do the top-down analysis, but I had an issue with my software. My OBS have been misbehaving. But I recently got it to work. So I'm trying to bring out the top-down analysis out so that you guys will know what I'm currently looking at in price, where I'm looking for price to trade to this week. Now, I know we're on Tuesday, but we'll try to see where price is currently trading at and what I'm aiming to do or what I'll be patient enough to wait for this week. So currently we're on the dollar index chart. And on the dollar index, I'm currently looking at price. So last week I talked about price. We're expecting this daily fair value gap. So last week top the analysis. You can check it out in the YouTube channel on the live section. So last week I was anticipating price to respect the daily fair value gap, trade higher to run the buy side liquidity. Currently, I'm still standing to that bias, still looking for price to trade to the buy side liquidity. Price trade through the fair value gap, which I indicated with a Fibonacci tools. So here's the fair value gap price traded through last week, which I talked about this fair value gap, telling you guys that if I want to see price trade to this buy side liquidity, is depending on how price is going to be respecting this daily fair value gap. So price respected the daily fair value gap, traded through the daily fair value gap as anticipated. Price did a retracement back to the daily fair value gap. Now we're currently on Tuesday. Price traded back to the daily fair value gap that price formed last week. You can see the daily fair value gap that price formed last week. I'm currently looking at price to see if price will respect this daily fair value gap and this new week opening gap. So this is last week new week opening gap. I'm currently looking for price to respect both areas. Now, currently price did respected it, but I'm still looking at the price action, which I'll go into lower time frame to point at the specifics. On the 1 hour of the dollar index, so here's the opening price of this week. So make sure you mark out your opening price, it's very important, which I talked about how price will be using it as a reference point to indicate the premium and discounts of that week. If price is above, price on the premium, price below, price on the discount. It's the same thing to opening week price. So I normally use it that way. So that's why I mostly mark out the new week opening gap. It's very important. Price will always reference to it to use it as a support or as a resistance level. Whenever price is set to trade to a draw on liquidity. So on Monday, price traded below the new week opening gap, retraced to the new week opening gap, expected it, traded lower, took out Friday's low, price to kept trading lower, filled in the new week opening gap, traded to the new week opening gap to the mid range, respected the mid range, did a shift in structure, retracement to the 1 hour fair value gap, price did a retracement to the 1 hour fair value gap. Now, was where I took my entry on Hero USD, which I will show the specific entry on Hero USD. Retracement to the 1 hour fair value gap. I was looking at this area as an area where price will be respecting to go for Wednesday high, this equal highs, as a draw on liquidity. This is where I was looking for price to trade to. Price did trade higher, did move my stop to break even. Traded through the new week opening gap, which gave me more confirmation to look for higher prices. But before the live, price did a deep retracement back to the range, and I was stopped out on Hero USD at a break even. But I'm still looking for higher prices. Still standing with that bias of same price go for the equal high. If price were to keep on trading higher, I would like to see before FOMC news. Now, I'm mostly paying attention to FOMC because this week is currently FOMC news. So the federal funds will be announcing the interest rates on the United States. So I'm mostly focused on what will price do after the FOMC news. So as I've been stopped out, I'll wait till after FOMC news to trade, which will be on Eastern Standard Time. It's going to be tomorrow, which is Wednesday, after 2 p.m. So after 2 p.m., getting to on Thursday, I'll be deciding on what to do, which is to see price go for this high. So I wouldn't be taking any trade. If I were to take any trade, it would be an intraday setup, just looking for a quick move, but still standing with the idea of me anticipating higher prices to run this high. And the overall bias is to see a run on the buy side liquidity. So taking any major trade should be after FOMC, which is tomorrow, 2 p.m. Eastern Standard Time. The reason I've been trying to keep an update on this top-down analysis is to teach you guys how to apply what is being taught on the 2025 mentorship program. Going week by week, showing you guys using only two time frames. If you notice, I've been using the daily and the 1 hour. I use more time frame when it comes to having more reasons to whatever bias I'm looking at. I like to look at the 4 hour. I like to look at the 15 minutes to go into more details. I'm just giving you a broad explanation to where I'm looking for price to trade to and showing you how you can easily use those time frame for your entry to whatever area you're looking for price to trade to. So looking for price support from this new week opening gap to trade to this high. But if this new week opening gap were to fail, let's say the FOMC news came out and this new week opening gap failed, then there's a chances of price going for this swing low now. That is the chances, but before I would decide to look for sell to go for this swing low, I need to see what FOMC would trade, what should be the most likelihood of price trading higher or lower should be after FOMC, which is tomorrow, 2 p.m. So moving to Euro USD, Euro USD, which I've explained, we're looking for the opposite of price, what I'm anticipating price to do on the dollar index. So I'm anticipating higher prices on the dollar index, while Euro USD, I'm anticipating lower prices. Now, last week I talked about price trading through this daily fair value gap, which you can see how price traded through the daily fair value gap, which has been pointed out with this fib. Trade through the daily fair value gap for a support of price to trade lower. I was looking for price to respect this daily fair value gap, which price formed last week. It's kind of the same to the same fair value gap that price formed on the dollar index. Looking for price to respect it. Now on Monday, price traded through it, closed above the daily fair value gap, traded to this new week opening gap. Now the only support area I'm looking for price to respect before trading lower should be this new week opening gap. If price were to hold at this new week opening gap to trade lower, then I'll be looking for price to go for the sell side liquidity. Now, depending on what the dollar index does, but I'll be very most likely taking any aggressive trade before FOMC. So I'm mostly going to be patient to wait for FOMC because the Euro USD is not looking that promising when it comes to anticipating lower prices to run out the string low. I need to see some big move in price to suggest that price is going for this swing low, which is the sell side liquidity, which is currently Wednesday low. I need to see that big move from tomorrow FOMC. But so far, the dollar index have been on the same bias with the Euro USD. The correlation have been tight since on Monday because on Monday, price open traded higher, which here's the new week opening gap. Always mark out the new week opening gap. It's very important. This will give you a good explanation on what price is currently doing. So on Monday, price trade higher. Rex used the new week opening gap as a support area. Used the daily fair value gap as an inversion fair value gap. Traded higher. Now there's a chances of price keep on trading higher, but price traded through the new week opening gap, which is traded through this new week opening gap. Came back, traded below the new week opening gap. That was when I took a sell. I took a sell anticipating a complete retracement, a trade through this new week opening gap below. I was looking for that trend lower. Price trade lower to this new week opening gap. I was still holding on to the trade. Stop was at break even. I wasn't looking at it as a major area or looking at a major reversal back to my entry level. I can say that I was very confident in the idea of price trading lower because it was well aligned with the dollar index, respecting the same new week opening gap, a shift in structure during the London section, an order block, and a fair value gap was well aligned with the dollar index. So I was very confident in price to keep on trading lower because of the reaction I was seeing from the GBP USD. But before the close of the London, before the close on the New York section, price the retracement, and I was topped out at break even. But so far, I'm still sticking with that idea, still paying attention to what price will do. I'll be doing the final destination on where I should trade this week when price is giving me those clear indication after FOMC. So I'll wait till after FOMC before taking any aggressive trade or taking any long-term position on Hero USD. So let's move to Hero to GBP USD. Now in GBP USD have been the currency that I've been trading fine to my bias since last week because GBP USD traded lower more than Hero USD last week because it was aligned with the same idea of anticipating lower prices for price to respect this sort of block, anticipating lower prices, trade lower because I'm anticipating higher prices on the dollar index. So last week, price traded deep down, traded through this candle to the mid-range of the candle, did a little support, used the daily fair value gap as an inversion fair value gap to trade lower, to take out the sell side liquidity. Now, to me, price already did most of the move on the dollar index because price already took out the sell side liquidity today, which that was one of the reasons I held to my Hero USD trade. Even if I was around 3 hour on profit, I still held to the trade without taking any position out because looking at how GBP was strong, trading lower, GBP USD was strong, trading lower. That was why I stick to the bias. So on Monday, price traded higher back to the daily fair value gap. Now price is invoking this, using it as an inversion daily fair value gap. With this daily fair value gap, I talked about price trading through it, which I took trades, which was explained in last week trade review, top down analysis trade review. You can check out the video still in the YouTube channel on how price traded lower. Told you guys I'm still holding up to my setup. I'm still holding up to the trade to see price take out the sell side liquidity, which it was just recently the price traded to the whole TP, which was a 7 hour trade. But my next outlook on this currency, I'll be using the daily bias, which I talked about how to trade on intraday setups. I'll be focusing on intraday setups to see more lower prices to run out the sell side liquidity again. Because to me, this is like an equal low, this low, and this low. I want to see more aggressive lower prices trading lower. And to see how far price will trade lower, maybe I'll be looking at how price will be reacting to this week lower. This should be my next draw on liquidity on how price will be reacting to this week. Mostly to see a feel on the week to run out the sell side liquidity below. But if the dollar index were to keep on trading higher, then I'll be looking for more lower prices to this week as the next draw on liquidity. On the 1 hour time frame, you can see how price were expected the mid-range of the inversion fair value gap before the aggressive move trading lower, which was explained in last week top-down analysis. This whole move was explained on last week top-down analysis trade review. A new week opening gap. Here's a new week opening gap. And you can see how price used the new week opening gap. Trade through the new week opening gap, use the new week opening gap as an inversion gap, traded lower, took out the sell side liquidity. Now you can easily use this for an intraday setup, retracement, fair value gap, 1 hour fair value gap for your entry, anticipating lower prices for price to trade lower because the trend was fully aligned. On the 5 minutes, you can see the setup. This is during the New York section, shift in structure, retracement, fair value gap, 5 minute fair value gap. This should have been your entry. This is how to use it for scalping and for day trading. How to use this trade idea I'm giving out as a scalping trade and a day trade is very, very, very easy, which I did a video on it on the YouTube channel. You can check it out. I talk about whenever the 1 hour time frame is ready to expand and you know a price is expanding to based off your overall bias, you just need to go into lower time frame whenever price is trading to a premium, which in this example, price is trading to a premium 1 hour fair value gap, and we are looking for discount price. Price rate to the premium 1 hour did a shift in structure, a 5 minute shift in structure during the New York section. This should have been your entry. And your next draw on liquidity is to see the 1 hour go for the sell side liquidity. It's to see price go for the sell side liquidity. You can see how you should have held out to a good trade position, which is the only trade I currently have running. Currently, I haven't closed the trade. I'm still looking to hold it as a full week position, but most of my position have already been closed after price took out the sell side liquidity. I think 70% of the position is already out. I'm only holding on to the full position just to show you guys that I still trust the idea of price trading lower. So far, GBP USD have traded to the bias correctly from last week to this week and delivered well after this 1 hour shift in structure during the midnight to London section, a retracement to the 1 hour fair value gap before a full distribution lower. Now, I should have gone more aggressive in looking for those entries from high as soon as price retraced to the inversion fair value gap. But due to my record, I perform best whenever price is already at a clear trend to trade lower, not trying to chase the high or the low of every setup. Always look at that good spot where you are entering at a well-confirmed trend, which is entering at this 1 hour fair value gap for price to trade lower to run the sell side liquidity. So our next currency should be USD JPY. Now on USD JPY, the bias on USD JPY is slightly the same to the dollar index. Whenever you're anticipating higher prices on the dollar index, then you'll be anticipating higher prices on USD JPY. Now on USD JPY, I talked about price. We're expecting this order block. I showed you guys the setup. You can check out the YouTube community. I posted a trade before price even traded to this buy side liquidity. I posted the entry before price traded to the buy side liquidity. You can check that out. I was anticipating higher prices for price to trade through the daily fair value gap to run the buy side liquidity. So price traded through it on Friday. That was one of the days that price did the full trade higher. And I was anticipating a run on this buy side liquidity. Monday traded higher, traded to the buy side liquidity, well close to it, made it an equal high. Today's Tuesday, price traded lower, back to the range. Now I'm still holding up to the idea of price trading higher. I'm looking at this buy side liquidity as an equal high now. Now that Monday failed to run it, but traded lower to a discount. Looking for price to respect a discount fair value gap, which I'm paying attention to this fair value gap. Let's take this out to look at the daily fair value gap. Looking for price to respect this daily fair value gap. Price traded lower to this daily fair value gap. I'm still sticking to the idea of anticipating higher prices to go for the buy side liquidity. I'm just looking at the point of interest in which price will be respecting. At the same time, looking at this order block to see whatever area price will be respecting, it needs to be in full alignment with the dollar index. I think that is one of the best advantage when it comes to trading correlating pairs. You can easily look at when the major currency is ready to trade. Now, on my next video, which I'll be talking about how to increase your win rate, what are the things to do to increase your win rate, is mostly going to be focusing on those key ideas for you to use to improve your win rate. So look out to the video. I think it will be available tomorrow, which is Wednesday. You can check it out at the YouTube channel. So on the 1 hour time frame on Monday, price tried to run the buy side liquidity failed, did a shift in structure retracement, respected the fair value gap and just out of block, traded lower. Still looking for higher prices, even if price is still below the new week opening gap. I think that makes it a high risk to reward trade if I were to take any trade trading higher. Still looking for price to respect it. Currently, price did a little bit of an internal shift. Still expecting the order block, and you might see higher prices going higher. Remember, I'm only going to be taking aggressive trades, checking higher time frame setups after FOMC news. For now, I'm still looking at price, paying attention to inter setup that I wouldn't be holding for more than a day. So after the FOMC news, I need to see how price will react to the FOMC news. Then I'll be deciding on if I were to take any setup trading higher. But my overall bias is to see price go for the buy side liquidity. So on today's setup, I was looking at price respecting this daily fair value gap on a 5 minutes, which price did respected it, but it was later on during the New York section, before the close of New York section, the price respected it, did a shift in structure, retracement to the other block, and currently price is now respecting the other block. And this might be the turning point in this currency, which I'm not sure of it, which I'm not currently on any trade saying that I'm trading off this other block. No, I'm not currently on any trade. I'm just still paying attention to it. I rather miss out a setup before FOMC than to take any aggressive trade and price trades against me. That will hurt your trading accounts more than missing out on this setup because you can easily get involved after the news events. You can easily use an intraday setup, a 1 hour or a 5 minute setup to get involved for price to trade to your full target. But my next draw on liquidity is to see price go for this buy side liquidity. So I've covered a lot on this live section. I just tried to make sure that I bring out this live section before going deep into the week or even before the FOMC news so that you guys will know where I'm currently looking at price to trade to. And if you have missed what I've talked about on the dollar index, you can go back and watch through this live section again. So that is it for this live section. See you guys next week live section.